Big tech companies are going down. Tech companies' stocks are falling after below expectations Q3 results. Here's how bad it is. Meta shares fell 24% after the Q3 results. Amazon was down 15%. Apple down 2% after Q3 results, and the shares of Alphabet, the parent company of Google and YouTube, were down 7%. Let's now look at each one of them in detail. Number one, the one that seems to be in the deepest trouble is the Facebook parent company Meta. Meta shares, as we said, have plunged 24% after their Q3 results. In fact, they're at their lowest since 2016. What about the Q3 results? How is it so bad? Meta's profits fell 52% year on year in Q3 to 4.4 billion in the last quarter. In valuation too, Meta's value is down 74% in a year. The company has lost 700 billion of value and is now down to 268 billion. The value that the company has lost is sort of the valuation of many other companies such as Netflix, but that valuation Meta has lost in just a matter of 1 year. Now, why is this happening? There are overall economic reasons, but one is Meta specific. Meta is pouring money into the metaverse vision. Their Realty Labs have lost $9.4 billion this year, and all of this for Mark Zuckerberg's pet project, the metaverse vision, and the Realty Labs that are responsible for this have posted losses of $9.4 billion. That's Meta. Now let's go to Amazon. Amazon forecasts a slowdown in sales in December, which is the holiday quarter that's usually supposed to be good. And after this, their shares fell 15%. Now, it's not just these. Apple iPhone sales also hit a record in September quarter. That sounds good, but it missed estimates. Apple said that revenue will fall below 8% in December quarter when it's usually supposed to be good. And after that, their shares fell over 2%. Now to the other big tech, Alphabet, which is the parent company of Google and YouTube. Its shares were down 7% after less than expected results as well. YouTube's revenue fell by 2% year on year. Let's tell you why all tech companies are in deep trouble. What are the overall reasons? Well, companies are pulling back on digital advertising with rising inflation. So places like Facebook, YouTube, these are not getting enough ads from other companies as there's rising inflation, so companies are cutting down on their advertising costs. So inflation rate hike concerns are forcing cost cuts, layoffs across companies. There's also uncertainty in the global economy that's hitting the big tech companies. Next, interest rates are rising, which is making investors less willing to borrow funds and take more risks. Another problem is that privacy rules by companies such as Apple are making personalizing ads harder for companies such as Facebook, as they can't get personalized data for users that deny them the rights. The problem is so bad that it's now being compared to the dot-com bubble of the 1990s.